Good afternoon, all traders across the globe. This is Jeff Killian for the VTC, VTCtraders.com. And today, I'd like to talk all about what it takes to become a real professional in the world as we know it today within trading. There's one thing I've learned within the last 30 years is that supply and demand dictate everything. That will never change. There has always been and will always be the deepest pockets from the Rothschilds way back in the day to BlackRock today, to Vanguard today, to State Street today, that can and do move prices from one level to another. Now, at first glance, that might be a little hard to swallow because what we're talking about here is real manipulation. These people have the kind of money that can and do move prices from one level to another. And once you get your head around that everything is completely manipulated, okay, so let's figure it out. Let's figure out how to capitalize on what they do when they do it at the preferred moments and times. So when we look at a methodology that can trade any market, any freely traded market that has enough liquidity, meaning enough volume behind it, enough price chart pattern uniformity, enough participation, right? Like ES, like NQ, like YM, the example we're using today for the proxy, like index funds, like ETFs, and yes, stocks. We need to find a way to be able to trade these with a high degree of probability. Because when you're over 80% on your probabilities and your findings on your end of day analysis first, then the real-time trading, if you're going to go that route, if you're not a position trader, if you're not a 3, 5, 7, 9-day holder, then the odds, the probabilities, they go up so high that the risk in losing money becomes mitigated to the smallest amount. And this is exactly what we need to do because risk control is the key to longevity in trading any instrument across the board. I have none of this pre-prepared. This is coming straight from my head from the last 30 years, from when I started out. And things were extremely difficult. There was no information on the web like there is today because the web was hardly there. So let's get right to business here. Before we get into these charts, what we're talking about here that you're going to see today has application to any time frame. Like I said, almost any market. So you're looking at an end of day chart on your analysis within my own personal workspace, but you might as well be looking, or you could be looking at a 15-minute chart, a 5-minute chart, or a 1-minute chart. As a matter of fact, in my real-time workspace, I have a 1-minute chart of exactly what you're looking at. But this is where I start. I start where the volume is compared to the prices, and I have the stochastics and momentum index right above it because I want to see if the trend has changed or not. So here we are in a situation where we're looking for an opportunity after the market has bottomed out with a pivot point low here. Now, I did back up the chart, so the date in question is 10/30/2023. So at this point, on this day, the SMI, the Stochastics Momentum Index, was on a positive divergence with higher volume kicking in right here to stop the market after the sell-off took place. Now, as we move forward in time, you'll see how the continuation of the crossover from below to above, the stochastics crossing above the momentum line, and then still below the 50 negative line here, okay, becomes with greater momentum and greater momentum until the market taps out at or about resistance right here on this day, and then the follow-up 11.3 is 11.6, right? And there you have it. And there's yesterday's action at 11.7. So this was a perfect opportunity to take a long trade just based on this price indicator in isolation. A long trading signal for 3, possibly 5 days. It tapped out at around 3, 4 days max. What else did we see here? Price chart pattern uniformity, 1, 2, 3, 4 bars down, which left us for an opportunity to trade back up to this point for our superior resistance at that time, which became price profit target 1, 2, and 3. The other two targets were right here on the open of this bar, the open of this bar, and the open of this bar, where things started to fall off because of the sell volume that came in here to drive those prices down. This is just one example. And I love the Stochastics Momentum Index because for me, I won't trade without it. For me, it's the most accurate price-based indicator, confirmation or not, that I could use. And it's the only one I use, in fact. So right now, let's get into the next indicator and the correct flow of analyzing your end-of-day charts before we get into real time. And it's going to be the MFI, the Money Flow Index, which is basically, I think we have it here. Yeah, MFI. So here again, on the day in question, 10:30, we already have a positive divergence as compared to the prices. For those of you who are not up to speed on positive divergences, we have a higher pivot point low and then a lower pivot point low established on this up day here, finishing up the pivot point low 3-day pattern. And then here, the disparity between, the difference between, the divided difference between this through and this here, and this through at net neutral and here, the degree of the slope as compared to this downgrade clearly says that there is intense short money because MFI is a 14-period look back with a different calculation than Chaikin money flow, that we should be stopping here as a good place to get geared up and start thinking about analyzing, preparing your work in order to go long. And what happens? Well, there we go. Right there. Case closed on MFI. This is extremely powerful. And people would say, a lot of traders, well, why would you use two different money flow indicators? Because short-term money sometimes comes in first and then the long-term money comes in second. Sometimes the long-term money comes in first and then the short-term money comes in second. But in either case, when one is not and the other is, or vice versa, and that gets put to the side, the ideal condition is that you have the MFI and the CMF with the same findings before the market turns around. Traders, listen, every trader knows who's been trading a really long time, like myself, that the majority, the lion's share of the money, like I've always said, is made when the market turns back around for one direction or another, whether it's short, whether it's long in this case. You got a 3, 5, possible 7-day window, depending on the market conditions, in order to capitalize on this. You could trade a stock, you could trade an index fund, you could do any one of a number of moves within all of this real time, 7, 8, 9, 10, 12 trades, right? In a 3-day, 4-day window, high probability trades that have the same setup like this within the range of the daily charts, right? On the 15-minute charts, on the 5-minute charts, you have multiple positive divergences that look just like this. And then you're a go. As soon as the preferred entry gets hit, you're good. So this is not, again, this is not limited to YM. We have to use a proxy in order to be able to demonstrate what we're talking about, what we're laying down, what we're illustrating. So now we have a second confirmation or a third confirmation out of the Chaikin money flow indicator. And let's just keep going through here what we're looking at. MACD, you got it right here. And there it is. The positive divergence, and then the cross from below to above, right about here. Those who wanted to trade 1-2 days could have done that, could have waited, played a little more safe, not traded in until after 11.1, which would have been on the opening of 11.2, right after the market opened, if that was what you preferred to do. Okay, here's a Chaikin oscillator with a through established as compared to a peak. It's called the through. And then again, straight up with no look back till the market taps out and then starts to go off kilter. Probably today it'll be net neutral because the market did trade down in real time. So there you have another confirmation, the Chaikin oscillator, which is directly pegged to accumulation distribution relative to the MACD indicator. So here, if you're adding it all up, we're talking about a way to get behind the prices and discern what's really going on here. What are these people really up to? What is BlackRock doing? What is Vanguard doing? What is State Street doing? What are these people doing that are moving the market from one direction to another now? And as we build up the case evidence like a good attorney, we come to the conclusion that we know. We know we're right because we're doing everything right and it's completely objective. There is nothing subjective about this, people. Objective analysis is the key. Subjective meaning that, well, it looks like, I think, maybe, if, and the news says, and so on and so on. That doesn't work at a professional level with a trained technical analyst like myself, or we have an RN, and many people that have come through the system here. As a matter of fact, I'm looking at the list of the people who are in here today, and there's one person who studied direct with me in the mentorship program, and there's at least a half a dozen people who've taken the S&P 500 futures expert market timing course. So as a matter of fact, we have over 150 people in this room today. This is outstanding. So let's finish up with what we're looking at here. There is another way to get inside the market to understand the true mechanics of what's going on behind these prices, other than just the latest indicator that's being sold that doesn't have the rules disclosed. People, if you're doing that, that is the closest thing to suicide that anyone could ever attempt, because once that indicator doesn't work anymore because of different market conditions, because of different setups, you're going to leave it and you're going to go find another one, which you think is a methodology, and you're going to follow that. And once you lose $5,000 on that, then you're going to go find another one. So isn't it more or easier or logical to just get it right the first time, right? Let's take a look at another application on the Fibonacci indicator. This is where we were when I applied this from this data point here on the up at 8.1 all the way down to the open of 10.4. This is what I was looking at right here. Okay, so the prices traded back up. Here we are tapping out at 38.20, 34,294, traded back down here. And then as the prices traded through here, I want to know if the prices are going to trade down again, how far will they go? So we're going to do an overlay here of this. And this is what we're going to do. We're going to overlay 100 on 23.6 and 76.4 right here to see if the prices are going to trade through, how far will they move down relative to 61.8, 50, and 38.2. They tapped out at exactly at 50% with the overlay that we use here, our technique, using the Fibonacci ratios, and then traded back up to here. Traded right back up here to 38.2 on the original first layout that I just showed you. And there we have it. So this is another way that's extremely precise and accurate to be able to discern where these prices may go. I don't have all the time to go into this, but I know throughout the years I have tried many different ways in order to provide myself with extensions that were highly profitable with existing price profit targets based on these ratios. And this is the one that came out the best. So again, what I have to say to all of you today is that, again, we could be looking at a 15-minute chart, a 5-minute chart of everything we've gone through. And the most important thing, as I mentioned earlier, is going through the flow, the correct flow of these indicators when you begin to analyze, because it always begins with the volumes compared to the prices. How much volume do we have at the level here that was shaken out at 32,683 below the market on this close and this open, to take all these stops out that long-term traders, investors, even funds that had laid out here, take all that money, send their kids to college, right? And all the market makers, and then move the prices up. But as you can see, the high volume here, which created market stop, totally fell off, which dried up the up move to stop here. So we need to look very closely on a daily basis and dissect what we're looking at here. We are way below the 21 period smoothed simple moving average here. So it's a clear cue that the market doesn't have enough strength to keep moving up. If anything, now we should start gearing up to possibly go short again, right? Because there's no more fuel behind the prices in order to keep moving up, unless something happens in the overnight session. The price is already traded down today. I mean, we could go back and look at, what was happening here with the Dow. I don't even know if prices, settlement prices are in yet, but I know that based on 4:34 p.m., no, settlement's not in yet. We're down 58 from yesterday. Down 58. That's negative 0.17%. So we're down below this area right here at this point. So now we really need to start gearing up to think if and where these prices are going to trade down. And if they do, then we have a bunch of opportunities here tomorrow to trade in real time or end of day. Once we get through this area here, excuse me, right down to here. And I would say at this juncture right here, we have a free and clear. Okay, from here to here. So you might want to wait till you get through this level, because you have the full bar here, right? So this is where you could try and see if this will work for you right here. And then again, Control CF. This would be the earliest possible in at this point. Now that remains to be seen as we look at the charts in real time. But there's an enormous amount of money to be made here, traders. Doesn't look like a lot on an end of day chart, but approximately 34,133 down to 33,882. How many points is that? Does anybody have a calculator? It's a lot. And then once we get through here, which would be an NTZ, a no trade zone in real time, not end of day on a position, right? We look to go short below 33,824. You possibly get a 50% run in between this bar, because it is so long between here and here, right? So you do a 50 from here to here, which is approximately 33,682, and then you got 33,545. So there's an awful lot of money here to be made on the downside, people. An awful lot of money out there. This is the way to get set up, gear up, and start laying out your analysis now to go short again, because the market already traded down today with a down close. First chart, second chart is MFI. So we look at the short-term monies compared to that volume, right? Right. Third chart is the CMF. Fourth chart is the SMI in isolation, right? And then we're moving right into the MACD indicator, Chaikin oscillator, and then right into the MACD indicator to see where we stand. Now, in this particular indicator, we don't need a crossover from above to below or below to above in order to consider going long or short. All we need in tomorrow's opening, which will happen at 5 p.m. Eastern Standard Time tonight, right? 6 o'clock Eastern Standard Time tonight, is a downtick like this, in order to be able to get clearance on an end-day basis to go short. Okay? Okay. So I want to tell you that I know that your journey's not been easy in a lot of cases. I know that there's many distractions. I know that there are people out there who do not want you to succeed because I know how life works. I'm a very positive person. I have to hang around positive people. Most of them are traders because the negatives that come across the board will get into your psyche and keep you out of this game on a permanent basis. I can't stress enough how important the psychological side of trading is. So, my point is, and I'm not going to go to town on this thing, I will tell you that once you really understand what's going on behind these prices, once you really get into this, you take the time, you study, you put your head down, you do what you're supposed to do this part time or full time, to talk to your financial advisor with a lot of common sense, and don't buy the plate of the day because now you know it takes on an entirely different dimension. You are so empowered, so in the know that you can take trades, positions, real time, whatever you want, with the strength, with the confidence and conviction that otherwise it doesn't exist. This is the truth. This is the way it really works. You have to get in this deep in order to make this happen for yourself. I mean, obviously, you can see I'm passionate about this. I've been in this for almost 30 years. What I had to go through, I wouldn't wish on anybody but an enemy because it was so painful. Stay away from negative people. Hang out with positive people. Anybody who doesn't subscribe to your program, just tell them, listen, I'm busy. I can't talk to you today. I got something else to do. I'll catch up with you later. And don't tell people your plans. Never. Because if they can't have it, they're going to make sure that they give you the energy so that you don't get it. Protect your intellectual property, your dreams, your goals, and don't share them with anybody, even your wife. Doesn't matter. Even your business partner, current people. So before we get out of here today, okay, I'm going to fly this in. This is the entire explanation of the course with all the modules. I'm sure you've all seen this already. This is the S&P 500 E-mini futures expert market timing course. What we just talked about today is the foundation of the mountain of information that's in this course. This is the culmination of nearly 25 years of trading put into 7 hours. Like I'm giving you today, you can see where I'm coming from. If you're going to get the right information, you're going to get it here. And you're going to study it until there's no, you can study these sessions 20, 30 times. It doesn't matter. I'm sure you've all seen this page, like I said before. The price on the web page is $14.97, and that's not going to change because it's worth it. We offered a deal about a week ago through marketing. It was $9.97, something like that, and people bought the course. The people who bought that and paid that money for it already got a rebate back on their cards, so we could give them the opportunity to be able to get this today, like some of you have already, for a price of only $4.99. What's it? $4.97. Yeah, let me see if I can get this in here. One moment. Yeah, here we go. Okay. This is a hell of a deal. If I had a choice to be able to do this, capture this kind of information for only $4.97, I'd be all over it. This is what you're going to see. It's a Stripe payment portal, $4.97. Anywhere you are in the world, you can get this. At the end of it all, you get a half hour worth of me at no charge. So whatever your questions are, whatever you're stuck on, whatever we need to troubleshoot out, I'll give you my word. I'll give you a half hour of my time, no charge, after you finish this course, and we'll get it squared away as fast as we can. And if you need it recorded so you can play it back, I'll do it. I'll record it, no extra charge, with my GoToWebinar program, and you can have that. All these modules from this course you can study 24/7 online wherever you are, any time of the day, like I said, on demand. So this is a big benefit in today's world. Did I miss anything? I don't think so. Hi, Bill. Hi, Chris. Hi, VJ. Recognize a lot of people here today. I'd like to thank the over 150 people who joined us today. We appreciate you coming. The link I put in the chat area to buy this course. And so you can go ahead and open that link and bookmark it so you have it when you need it. I would recommend that. And if you need to look at the page again, you can on the website, vtctrader.com, a mini course, and go over everything. But like I said, I'm sure most of you have been there many, many times. So this is the end of our presentation today. For any of you who have gone through the Executive Mentorship Program and want to get into the trading room, we're going to be hosting that again very shortly. So go ahead and drop me an email, give me a call, and we'll see if we can schedule the time. Okay. Once again, everyone, thank you for joining us today. In the chat area, we're going to leave that open so you can click through that link and buy this course today for only $4.97. This price is not going to last. This is the lowest it will ever be. And there we are, back with the prices. Thank you for joining us. I'm going to leave this room open for a little while now so people can click through.